Okay, so today I'm going to go through 2022 question 2 cash flow statement, higher level. So start with your operating profit, which is given to you in the question, 227,000. Then you add back all your depreciation. So your depreciation, you have to look at your notes here in the question, and it said the depreciation for machinery is 30,400. Now you just have to find the depreciation on the buildings. So it said there was no disposals of buildings, so you just have to get the difference between last year and this year. So 60 and 75, so it's gone up by 15, and it already told you the machinery was 30,400. So when you add the two of them, 30,400 and 15, your depreciation this year is 45,400. Now that's a loss, but there's nothing got to do with your cash. So to go from your profit back to cash, you have to add it on. Okay, so now you look at your stock, your debtors, and your creditors. So your stock has gone up. Okay, so you have an increase in stock, and it is 36,000. Now, because your stock has gone up, you have less cash because you bought stock. Next one you look at here is your debtors. So you have an increase in debtors. It's gone from 171 to 185. So the difference there is 13,400. Now it's a minus figure because your debtors has gone up, so therefore more people owe you money. So less people even paid you back. Okay, so people owe you more now, so they must have borrowed more off you. So you have less cash of 13,400. Your creditors then, so your creditors has gone from 241 to 250, so that's an increase in creditors. You owe people more money. Okay, so therefore it's a plus figure because you've done the opposite to paying them back. You haven't paid anyone back, so you have more cash. Okay, and the last one, it says about you selling. It says you sold machinery for 33,000. Okay, so you have to see if you made a profit or a loss on that. Okay, so we're going to put in sale of fixed asset, and we're going to see if we made a profit or a loss. So I've done a work in here. So cost of 41, where am I getting that? So I go back up here. It went from 438 to 397. So your cost has gone down by 41. So therefore what you sold must have cost you 41. Now the depreciation 9,000. So your depreciation last year was 187, and this year it's 209. But it told you in the question that the depreciation for the year was 30,400. So if your depreciation last year was 187 and you add on 30,400, that should be this year's figure, but it's not. So the difference between 187,600 plus the 30,400 and take away this year's is how much depreciation was on that machine that you sold. So you bought it for 41, the depreciation on it was 9, so therefore it was worth 32. You sold it for 33, so you made a profit of $1,000. Okay, profit isn't cash, so you take away 1,000 to get back to your cash. You add them up, and that's part A done. Okay, 231,000 net cash inflow from operating activities. Now for part B, the easiest way to remember your headings is a little whatever anagram you use, but my one here is Orla rings the chipper every Monday and Friday. Okay, so we have our net cash flow, 2 euro columns, and we start with the answer from part A. Okay, so we have operating activities, so Orla, so O operating activities, and we have our answer from part A. Okay. Rings, so something beginning with R, return on investment. So it's basically interest paid and interest earned. So return on investment and servicing of finance. So have I earned interest or have I paid interest? So I look here at my question, and it says I have investment income for the year, 3,800. Great. So that is money coming in. But last year I was owed 950. And this year I'm still owed 1,050. So I was meant to get 3.8, but I was also meant to get another 950. So both of those added together, and I take away the 1050 that I haven't got yet, and I'll get how much investment interest I actually did receive. So I have a little working done for that here. So working 2, due last year was 950. You add on this year's figure of 38 and take away what's due of 1050, which gives you 37. Now that's money coming in, so it's a plus figure. Right, next we have the interest we paid. So interest for the year 12,000. We do the exact same method. Get last year's figure, add it to what we should have paid or received this year, and take away what we haven't paid or received yet at the end of the year. So 2,000 plus the 12, which gives us 14, minus the 2,6. So that should give us 11,400. So interest paid 11,400, and that's a minus figure. And again, I have a working done there for that. So your 2,000 at the start of the year plus the 12 for the year minus the 2,600 that was due at the end of the year. Okay, we add those together. Now, so tax and tax paid. So the exact same thing again. Corporation tax is 48 plus the amount for the year, 66. 48 plus 66 minus 52. Okay. So tax paid, and we end up with 62,000. And again, we have a working done there for that. So 48 plus the 66 minus the 52. Okay, CHIP or capital expenditure and financial investments. So capital expenditure. Have we bought any buildings or land? We started with 732. It's now gone up to 850. So we have the purchase of our buildings. So the difference between that is 118,000, and it's money going out. Okay, up here, investments. It started at 185, now we've 165. We must have sold 20,000 worth of investments. So that's money coming in because we have 20,000. And we also sold that machine they told us down in our workings, which was, we got 33,000 for it. So that's money coming in, 33,000 a plus. We add up those, and that's the capital expenditure and financial investments working done. Okay, E, equity dividends paid, and you simply pop in dividends paid from the question. So you go up here, dividends paid 30,800, and pop it in. Okay, at this stage we do a little subtotal. So we add up, and it's called net cash inflow before liquid resources and financing. Okay, so it's important you know this line because it actually tells you your next two headings. So management of liquid resources and financing. Okay, so management of liquid resources if you buy any government securities. So it says government securities have gone from 10 grand to 35. So that is 25,000 you've bought, and it's a minus figure. Financing, so you look at your financing section. Your debentures went from 200 to 100, so you must have paid back 100,000 debentures. Your shares went from 700 to 770, so you must have sold shares, so that's an increase. And your share premium went from 0 to 12, so that's an increase. So we pop the three of them in. Repaid debentures 100. The shares we sold we got 70,000 for, and the share premium we got 12,000 for. Again, we make a subtotal there and we add everything up, and that's our increase in cash, and that's our cash flow done. So from last year to this year we have more cash by 22,500. Okay, now we can check this by doing a reconciliation. Okay, so we just get the answer from part B, our increase in cash. Now, anything we did with our debentures or government securities, which is here, we do the opposite. So if they're a minus above in part B, they're a plus down in part C. Okay, so it was minus 100 and minus 25, so we have plus 100 and plus 25. Okay, now we add those together, gives us 147,500. Actually that 25 and 100 should be swapped around, but it's the same difference. So that's our change in net debt. Okay, now we get our net debt at the start of the year and our net debt at the end of the year. Now, how do we work out these? So, at the start of the year, we're looking at the right hand column. We've no money in the bank, but we have government securities at 10 grand. So you're starting with 10,000. You owe the bank 8.5, so 10,000 minus 8.5 minus our debentures of 20 grand. So you see here in this little work in here, so 10,000 minus the 200 of a loan minus the 8,500 you have a bank overdraft. So your net debt at the start of the year was 198,500. Take both of those away from each other, and your net debt at the end of the year should be 51,000. So you have a debt of 51,000. So you can check that. So you have assets of 14,000. You don't have a bank overdraft, so you're still on 14. You take away your debentures of 100, and also you have government securities. So 14 plus 35 is 49 minus the 100. So 49 minus 100 is minus 51, and you know you're correct. Okay, hope that was helpful.